A new year and a new you, and maybe you're looking for a way to make some extra cash this year, or maybe you want to give up work entirely. Well, you may have noticed a lot of ads right now promoting online share trading. But is it as easy as it looks, and what exactly could go wrong? Well, the pandemic has shaken up the world of work. More than 114 million people lost their jobs in 2020. Our debts soared too. In the US, total household debt stands at $15.2 trillion. And with prices rising quickly, inflation is on the up, hitting averages of 6% in many of the world's richest countries. So amid all that, you'd think stock markets would have been struggling too, but actually the opposite is true. The Dow Jones, that tracks the performance of 30 prominent companies listed on US stock exchanges, jumped by nearly 19% in 2021. Some individual stocks performed even better. Apple became the first company to be valued at $3 trillion. Its shares jumped 34% over the same period. And shares in the US car maker Ford rose a staggering 136% last year, making a tidy profit for anyone who invested at the start of 2021. But just a decade ago, if you wanted to invest in the stock market, you'd either have to be a city trader or pay a broker to make the trades for you. But now, thanks to technology, small investors can get in on the action, often without paying commission, using share trading apps. For some, it's been a lucrative side hustle.
I got into day trading because of the pandemic. COVID hit, we got shut down, and I had to figure out a way to supplement my income. I'm a real estate agent here in Washington, D.C. and Maryland, and those unemployment checks that they told us to file for was just not going to cut it and pay my bills. So I decided to take a risk and take $30,000 out of my money marketing account, drop it into a brokerage account, and decided to teach myself how to day trade and learn the stock market. And that's what happened. It was very quickly, and I'm so glad I did, because I did find success through it all, and it's been an amazing journey.
And this is where the story of GameStop comes in. Remember that? Here's our US business correspondent Samira Hussein with a reminder of its roller coaster ride.
Not long ago, if GameStop was known at all, it was known as a simple retailer, a chain of shops that sold computer games. But in December 2020, the company became a huge story in financial news and one of the hottest stocks on the market. The reason was the hordes of small investors who started buying GameStop shares at the same time. Sharing insight and strategy on social media, they entered a battle with big investment funds who were shorting GameStop, betting that its shares would fall. And for months, the small investors seemed to prevail, driving the company's stock up from $18 to almost $350 at one point, inflicting heavy losses on the big funds. But all bubbles eventually burst, and GameStop didn't hold all of its huge gains forever, falling to $50 within a few days, leaving plenty of the retail investors nursing losses too. It did, though, show everyone that small investors and social media can cause major disruption to the financial markets.
Those who oversee the industry warn there's not always safety in numbers.
It's really important for investors to avoid following the crowd whenever possible, because whether it's a chat room or a bulletin board or a listserv that you're participating in, you need to think about what stands behind that advice. Is that person registered who's giving you advice? What knowledge does the person who's giving you a tip have? Do they have an interest in the stock that they're promoting that you buy? You want to find out all those things. And again, you want to come back to your goals. What's right for you? Why are you investing?
And it's that ability to decide for yourself that's meant a boom in trading apps. One of them, eToro, signed up 9 million users last year. We'll hear from its boss a little later. But what about those traditional traders that do this for a living? Well, they charge commission to trade on your behalf. Dan Kemp is the Chief Investment Officer for Morningstar. It's a firm that does just that.
It's not about access to information. It's not about the technological tools that professional investors are able to use. It's really about the way that professional investors think. It's the difference in the decision-making process between professionals and private investors.
But what is that difference in decision-making?
All of us, whether we're private investors or we're professionals, are subject to behavioral biases, weaknesses in our thinking. The difference for a professional investor is that part of their training is to help them overcome those weaknesses, to make better decisions, to think long-term, to understand probabilities.
And that's a view shared by the Consumer Federation of America. It says the current market boom could lead to some amateurs being a little too confident.
Where a lot of new investors have experienced significant profits from investing in individual securities. They've been doing so in a market that has been a bull market for the past 2 years. And so a lot of these first-time investors have not yet experienced a down market, which means they largely have not yet experienced a lot of the risks that are inherent and present in the capital markets.
Even those who make money day trading say you should be prepared to lose money as well as make it.
You're going to lose money. It's not easy. You have to study. And if anyone that wants to get into day trading, just be prepared. You know, you are going to pay market tuition. You are going to lose money. And you have to just make sure that you understand that your rules. And one of my rules is to take your losses quickly and make your mistakes really cheap.
Well, one of the most popular online trading platforms is eToro. They've now got 27 million users. Many of them signed up during the pandemic. Their chief exec and founder is Yoni Assia. There'll be a lot of people signing up to your site who have never done this before. They have maybe limited knowledge of trading and the ups and the downs. What support do you offer people who've not been used to this before?
So we believe our unique offering, which is a social investment network. So it's a social network where our users can talk to one another. They can actually see the performance of others and automatically copy the most successful investors. Enables people to educate themselves through both their own experience, but also by looking at what others are doing and by other people's experience online.
Yeah, you talk about copy trading. That's a really interesting idea, isn't it? The idea that you could just follow what everybody else is doing, go with the crowd and hopefully follow a bit of their success. But we all know what goes up also goes down, and you could copy someone and lose a lot of money.
In general, we've seen many results of copy trading being more successful than just investing on your own. And you see people's track record. Today on eToro, you can see some of the popular investors' track record for years, for 5 years, 6 years, 7 years. But obviously, every investment, whether it's investing directly in the stock markets or crypto markets or copying someone, has its own risk. And we're trying also to provide people an understanding of those risks. So when you copy someone, you always see both the returns, but also the risk score. So what is the risk or volatility of that person that you want to copy?
What's interesting is the way that you are disrupting maybe some of the traditional players in this market. Now, we spoke to the Chief Investment Officer at Morningstar Investment Management. They say what separates, their traders and what they do from people who maybe trade using platforms like yours isn't necessarily the financial tools or the market information. It's the way that those traders are trained to think. They have a different mindset. Do you agree?
I don't think that's right. We are seeing a lot of extremely talented individuals who are investing on eToro. I think that retail investors, I myself was a retail investor for a long period of time since I started trading when I was 13. And I think people who have the experience, who devote time and attention to learn about the markets can be as successful as institutional investors.
I think it's fair to say that over the past 2 years, the stock market has had an incredible bull run. The markets have headed in one direction pretty much only. But that means there's a whole generation maybe of new investors who've never seen a falling market.
That's definitely something that we communicate to our customers. I was born sort of in capital markets out of the dot-com bubble and burst. I think that taught me a lot about the markets, and we try to provide information to our customers about what happened in the dot-com bubble burst, what happened in 2008. How can you protect your portfolio from potentially a significant downturn if the market corrects or if the market sort of goes into a downturn spiral? I think, again, it's all about diversification. It's all about understanding risks, thinking long term. And I think the biggest mistake usually retail investors used to have is to sell, to panic sell when the market corrects.
Yeah, and some people may come to you because you perhaps make it a bit more exciting. You've got things like leaderboards and rankings, and some would argue that is gamifying the whole system.
I think that platforms offer better engagement. Better engagement leads to people that are more educated, that have more experience in the markets. I think people generating experience online on platforms like eToro is definitely a positive thing. It's about financial education, which obviously leads eventually to financial inclusion, financial health. So I think platforms like eToro that enable people to collaborate, communicate, learn about the markets is always a very good thing. And people today, unlike again 10 years ago, when you didn't have today, fractional shares, you can open an account on eToro with $10 on your mobile immediately. And I think lowering the barriers to entry, enabling fractional shares, commission-free stock trading, all of that is democratizing the market and enables people to participate with smaller sums, therefore taking less risk and learn how to participate in the markets.
Yeah, and the regulators have the industry in its sights, don't they? I know the SEC was looking at this at the end of last year, and I just want to read you a couple of points that they made because it'd be interesting to get your thoughts. They talk about that gamification and the behavioural prompts, as they call them, used by firms like yours. They say it could understate the risk of a particular investment. They ask whether investors are appropriately protected when they trade or get financial advice. And they worry that a lot of features may encourage investors to trade more often, invest in different products, or change their investment strategy. All fair points, but what are you doing to make sure that you address those concerns and make sure you're protecting the customers too?
So first of all, we always work with our regulators and make sure that we educate our customers about the risks. We do believe that being able to see what other people are doing, being able to copy the most successful investors gives you tools that didn't exist before to become a more successful investor. And there's no doubt that as we see this scale up, this inflection point of retail investors flocking into the markets, regulators need to make sure that there are the right checks and balances and customer protection within financial markets. So I think rightfully so, we're seeing regulators looking at the booming market and making sure that there are the right checks and balances.
Yoni, it's good to talk to you. Thanks for being with us on Talking Business. Thanks very much.
Thank you very much, Ben.